Stop everything, right now. Silver just smashed through $75 per ounce. The breakout we've been screaming about for months finally happening in real time. And it's happening during Ghost Week, the most dangerous, most explosive trading window of the entire year, when liquidity evaporates and prices move like lightning. We are looking at a 150% gain in 12 months. That's not a bull market, that's a vertical rocket ship that's only just begun its ascent. The banks tried to kill this rally. They failed. They raised margins, they spoofed the market, they threw everything at it. And silver said no, not this time. Shanghai is paying $80 while New York pretends it's $75. That $5 gap, that's the sound of the system breaking in real time. COMEX vaults just lost another 3.2 million ounces in 48 hours during Christmas, when nobody's supposed to be trading. Someone is draining the system dry. Samsung's 9-minute charge battery needs 1 kilogram of silver per car. Tesla's scrambling to match it. BYD's already testing their version. The industrial buyers aren't coming. They're already here. And the math says we're heading to 150. Let me show you why.
December 24th, Christmas Eve. Silver closes at $71.11, a fresh all-time high. Wall Street goes dark. Senior traders leave for the Hamptons. The COMEX trading floor becomes a ghost town. Volume drops by 70%. This is when the magic happens. December 26th, Boxing Day. Markets reopen with skeleton crews. Silver opens strong at $71.50, immediately pushes to $72.80. Then at 9:47 a.m. Eastern, a massive sell order hits the market. 5,000 contracts dumped in 60 seconds. A $2.45 drop in 1 minute. The media headlines scream, silver correction begins. Rally over, bubble popping. But here's what they didn't tell you. That sell order, it was fake. It was a spoof designed to trigger stop losses and shake out weak hands. Within 3 hours, silver bounced back to $71.20. Why? Because there were no real sellers. The physical buyers stepped in immediately. Chinese industrial accounts, Middle Eastern sovereign wealth funds. They bought every single ounce that was dumped. The banks tried to create panic. Instead, they created a buying opportunity. December 27th, yesterday, silver doesn't just recover, it explodes. 72, 73, 74, and now 75. That's a $5 move in 72 hours during the lowest volume week of the year. When there's no liquidity, no one standing in the way, price doesn't walk, it teleports. And here's the terrifying part for the banks. Wall Street returns on January 2nd. The big money, the institutional capital that's been sitting on the sidelines, they're going to wake up and see silver at 75 or higher. They're going to panic. They're going to chase. And that's when we gap to 80, 85, maybe even 90 in a single session.
The Shanghai Premium. This is the smoking gun that proves the entire system is collapsing. In any functioning market, when the same asset trades at different prices in different locations, arbitrage traders immediately close the gap. It's basic finance. Buy cheap in New York, sell expensive in Shanghai, pocket the difference. Right now, silver in Shanghai is trading at $80.15. Silver in New York is at $75. That's a $5.15 spread. To put that in perspective, normal arbitrage spreads are 10 to 50 cents maximum. $1 would be extreme. But $5.15? That's not a spread. That's a different reality. That's two parallel universes. So here's the question that should terrify every investor. Why isn't every bank, every hedge fund, every algorithm on earth executing this free money trade? Why aren't they buying silver in New York and shipping it to China for a guaranteed $5 profit per ounce? I'll tell you exactly why. Because the metal doesn't exist. When a bank calls the COMEX vault and says, I need 100,000 ounces to ship to Shanghai, the vault operator responds, we need 48 hours to locate your metal. That's not logistics, that's panic. That's the vault operator saying, the silver bar you think is sitting in Vault A has actually been leased to Client B, promised to Client C, and we need 2 days to figure out which Jenga piece we can pull without collapsing the tower. The COMEX has become a fractional reserve casino. They're selling paper claims on silver that physically doesn't exist in deliverable form, and Shanghai knows it. That's why Chinese buyers pay $80. They're not stupid, they're not overpaying, they're paying the real price for metal they can actually touch and drive to their battery factory. The $75 price? That's the fake price for metal that's already been sold 5 times to 5 different people. Hard data that the mainstream media is completely ignoring. In a single 24-hour period, 3.2 million ounces of silver vanished from the registered vaults. Let me break down exactly where it went. Asahi Refining Vault, minus 1.42 million ounces, gone. JP Morgan Vault, minus 597,000 ounces, withdrawn. CNT Depository, minus 228,000 ounces, removed. Multiple smaller vaults, another 950,000 ounces combined. All of this happening on December 23rd, right before Christmas, when trading volume is supposed to be dead. Think about the timing. Who withdraws massive amounts of physical silver during Christmas week? Who's working overtime during the holidays to load armored trucks and move millions of ounces out of the COMEX system? The answer? Someone who knows what's coming. Someone who's terrified of being caught with physical metal when the music stops. This is what a bank run looks like in the modern era. It's not people lined up outside a building. It's forklifts loading pallets of 1,000-ounce bars onto trucks at 2 a.m. It's wealthy families, sovereign wealth funds, and industrial manufacturers saying, I don't trust your paper promises anymore. Give me my metal. Give it to me now. And here's what makes this absolutely terrifying. The COMEX registered inventory, that's the silver available for immediate delivery against futures contracts, now stands at 124.8 million ounces. That sounds like a lot until you realize it was 160 million ounces at the start of 2025. We've lost 35 million ounces this year. That's 22% of the deliverable supply, gone. But the acceleration is what should scare you. We lost 3.2 million ounces in 1 day. At that rate, the entire registered inventory could be drained in 40 trading days. That's less than 2 months. And when registered hits zero, when there's no silver left to deliver against the paper contracts, the price doesn't go up 20%, it gaps up 200%. We're staring at a mathematical extinction event.